We have an exciting topic, as I said earlier today, a topic that has been discussed since the mid-90s. Will traditional media really remain the elephants and new companies will remain the mice, or will the mice eat the elephants? And I think what we want to discuss today with a distinguished panel today is that question. We have our last panel member coming. Welcome, Sverre. What we have seen really in the last few years, I think it's an exciting topic, many aspects. I would like to first introduce everybody, and as Marco, I would suggest everybody says a few words about himself before we launch into the questions.
Thank you very much. I'm Bodo Tiehlmann from Axel Springer. I'm COO of the electronic media division. I have to apologize for Jens Müffelmann, who had to leave earlier for Germany. In our division are the vast part of the digital activity at Axel Springer that is not purely international and not related to the publishing business. One example is the Zanox group that Philipp Justus presented yesterday. Another example is Idealo. And the third example is Immonet, for instance, or Stepstone.
So, hello everybody, I'm Arnd Benninghoff. I'm the digital guy at ProSiebenSat.1, which is a pan-European broadcasting company. Digital consists of video on demand, online games, and the venture arm, and all new media platforms. So we invested also in new business, and we're focused on online video and games.
Hi, I'm Kai Henniges, CEO, founder of Viewster. We're a video-on-demand company pre-installed by all the manufacturers onto connected devices, tablets, and we've been crazy enough to be pre-installed in as many markets as those manufacturers have, and we're now executing on their strategy, picking the markets to win.
Is it on? Yeah. My name is Sverre Munck. I represent Schibsted. Schibsted used to be a Norwegian newspaper company. It still is a Norwegian company, but we've branched out from newspapers. We've been around for about 170 years. That's why I have a tie today. And apart from newspapers moving digitally, we have invested in a big way in online classifieds. Currently, about 36% of our revenues are digital, and about half of our profits come from digital operations.
Hi, I'm Shawn Colo. I'm the co-founder and the head of M&A of Demand Media, and we're a new media and technology company. As a media business, we reach an audience of about 95 million people every month, and they generally come to our consumer-facing brands websites. These are sites like ehow.com or livestrong.com or cracked.com. As a technology company, we've got a platform that consists of something called Demand Studios, which is a crowdsourced freelancer platform that we use to create, manage, and distribute text and video content. We've also got a suite of social tools. These are social publishing tools like Pluck, which a lot of media companies use for social networking, as well as Cover It Live, which is a tool that people use to cover live events. We are a relatively new public company. We listed on the New York Stock Exchange in January. And we're headquartered in Santa Monica, California. We've got about 650 full-time employees.
Hi, good afternoon, everybody. This is Yenal from Turkey. I am leading NOAH11, which is a group of companies indeed. We started around 10 years ago, first with the portal businesses to drive the right traffic or to train the consumers basically towards online. Since then, we managed to build around 5-7 very dedicated portals on entertainment, dedicated for women or kids or nightlife, or one of the biggest on economy. Then gradually moved into e-commerce. So we are running one of the biggest e-commerce sites of Turkey. Active in 36 different categories, holding 350,000 SKUs, and active members more than 3 million. Then expanded our portfolio in the e-commerce with some of the verticals. So we have a dedicated one for watches, dedicated one for luggages. Recently, we formed a private shopping site, which is nicely doubling every month. Next to the e-commerce, we have some other businesses. We are active on travel, so we have one of the top travel sites of the country, primarily focusing on ingoing tourists. Additionally, so we have a digital media company, represents around the 40% of the inventory of the Turkish media. Finally, we have the betting company, so one of the top 2 companies of the country. So overall, so we build quite a nice ecosystem. With that, we have 14 million users, and then once they are in, so they can shop, they can travel, they can chat, they can build their communities. Next to this holding company, our investors own another holding company, which is in traditional media. That's why I'm here. So I mean, we have seen all the changes from the traditional towards the digital. So not only in media, also in the commerce.
Thank you very much. If Will from Boxy is somewhere in the audience or at the coffee shop, please come up. You're the missing 7th member. But thank you for the very intriguing introductions. Let's start with the digital question to our old media company representatives. And I will ask all of them this perspective. How has digital media changed your business, and how have you responded to the challenges that it has presented and the opportunities it has presented? Arnd?
So the rise of the digital platforms and distributions affects our business in a fundamental way. First of all, I think it's a great opportunity to transform the business. We definitely have to rethink in which business we are and what we want to be. And I think we want to be a digital entertainment powerhouse offering music, video and games, and to become more independent from TV advertising. And we're definitely not any longer a pure TV broadcaster, because we are in a transmedia business. What does transmedia mean? It's not just another buzzword. It means telling stories on any existing channel or media by utilizing the new unique quality of each channel. So this transmedia approach has 2 sides. The internal view is the TV and the online guys have the same goals. Both should push the ratings and the reach. Secondly, there's one joint format development process. So all together kick off the format process, like The Voice or a new music show which will be launched in December. This will be a pure transmedia format on multi-platforms. And thirdly, there's a joint sales force selling cross-media concepts. The second view is the market perspective. There we have to deal with 4 key trends. First, there's a parallel usage of internet and TV. I don't know who of you is watching TV and uses his iPhone or iPad on his knees, but this is a great chance for us, because by providing social TV applications, we can identify the TV viewer, address and provide additional content, and reward him. Why not setting up a Miles & More program for watching TV? The second trend is an explosion of content, but most of all it's semi-professional content. Our response is premium content, blockbuster content is still king. And we have secured access by perfect relationship to US studios, and the entry barriers are high production costs. The third key trend is the fragmentation of platforms, and therefore we have to provide multi-platform experience. So reach the audience or the viewer on any platform at any time and anywhere he is. And the last key trend is the demand for cross-media sales. And as I've mentioned, we have a joint sales force responding and offering cross-media concepts. So our core digital strategy is focused on two areas. One is VOD, video on demand. We run the leading pay VOD platform with Maxdome, offering more than 35,000 titles, and the leading ad VOD platform with MyVideo, which we have acquired 4 years ago. And on the online games space, where we are heavily investing, we're aiming to become one of the top 3 online games publisher in Europe. The new digital business is generated and created in our venture arm. It's called 7 Ventures, where we're investing into new businesses and building new businesses. So that's the way how we see the opportunity in digital.
Well, thank you very much. Before we go to our friends that originally came from the newspaper industry, maybe the question to Yenal. It's interesting to see the different approaches that ProSieben has really very much integrated its digital business into the core TV operation. In Turkey, Dogan, Kanal D and ex-Star TV now with Ferit Şahin, but before wasn't really the launch pad for your internet business, right? You have very great positions in commerce and in other places, but it's less integrated approach. Can you share with us your perspective on how the Dogan Group was thinking about that?
Well, the journey started already more than 10 years ago. Indeed, the group identified the digital as one of the strategic areas. But also in a very smart way, group wanted to manage the complete new venture outside of the group. So then they formed another holding company, which is the one I'm leading now, so the DOL, Dogan Online. The reason was very simple. I would recommend to anyone who would like to invest from traditional into more digital. The culture is completely different, the speed is different, and of course the dynamics are completely different to build a successful business. Of course, you need to use the strengths of your current businesses, whatever they are. It could be human resources, could be finance, could be your connections or supplier base, whatever it is. But then the way you run your digital business needs to talk through, and then you need to address it with a relatively different business model, basically. Also, another smart move was to know where to start when you move into digital. Then Dogan started with the portal. So again, use your strengths, provide the information to your readers, users in a different format. So at the end, you have the content, but then the way you consume the content defines the success of your digital business. And over the years, once we reach to a certain size in terms of attracting readers, overall, if I add up all the traffic that we are generating, we are number 9 in the country. So all the sites we have generates that much of traffic, basically. Then you need to satisfy your users with some other services, if you like. The services, of course, one is matchmaking, so that was one of the initiatives that we started. Another one is user-generated content. That is the beauty of internet. So you can have great interactivity with your readers, users, consumers, however you want to call them, and then eventually giving them the option to use your sites as the shopping sites, basically. So the various e-commerce. Then eventually it comes to an ecosystem. So once you're in, so you can then benefit different parts of the company that you're engaging with, basically. So that has been the journey so far. I would say it has been quite successful. Trust has always been an issue on internet, but with the approach that our group took, we never had an issue with our user base in that sense. So we have always been a trusted brand, and we are still a trusted brand. Probably, we played a major role in Turkey to accelerate the penetration of internet overall in the country.
Thank you, Yenal. A lot has been written about the demise of great newspapers. You all know the stories about the Washington Post going from one of the largest capitalized franchises in the US, even Warren Buffett invested in it, to a company which is approaching a market cap of below $1 billion. Same for the New York Times. Now, that has been created by the digital revolution. We have two newspaper originated companies here which have done a fantastic job, actually, if you will, escaping that fate. And I would like to ask them the same question. How did you have that vision? How has digitization impacted the business, and how did you come up with protecting yourself from the evolution in such a successful way, and what are you planning to do with it? Maybe Sverre to start.
So to your initial question, how were we affected? Very simply, we were a newspaper company. The classifieds disappeared, literally speaking. Not in all sectors, but mostly. Our readers were disappearing and still are moving online. And we're now meeting competition from international players in terms of advertising. So the world has definitely changed, but the funny thing is that we're feeling quite good about it. Last year we had our best year ever. So the question is, how did that go about? There were a couple of defining moments in our history, and one of them was in April of 1995. We had our first strategy meeting where it wasn't even the internet, it was pre-internet. There were some closed networks available then, and we came to the insight then that internets are made for classifieds and classifieds are made for the internet. And that has really guided a lot of our thinking, our investment, use of human resources ever since. So from then having only paper classifieds in Norway in 1995, we now have online classifieds, I think, in 26 or 27 countries around the world, and there are some great assets amongst them. So really believing in online classifieds was one of the first steps. You use the word protect. That's the one word we don't use. After some initial trial and errors, we allowed our classified companies, be they subsidiary of newspapers or startup companies, to compete head-on with the newspapers. They still do, by the way, and we think it's the right thing. So that's with respect to the classifieds, which of course is a great source of profit for newspapers. With respect to the online news sites, the status today is that in our home markets, Norway, Sweden, and the Baltics, but Norway and Sweden in particular, our online news sites are amongst the largest sites in the country. And we used to be the largest site until Facebook came along, but they are the largest sites. And that also started in 97, 98, when we invested a lot and actually lost some money at the operational level, simply because we were too optimistic with respect to online ads and user payments. We actually developed pay-per-click user payment systems in 1998 with Accenture or whatever it was called then, before anybody thought about it. It was a mistake. But anyway, we invested heavily in that area, even during the downturn in 2001 to about 2003, and which meant that we came out of that downturn way ahead of the competition. And now currently, the online news business model, 96% of which is advertising financed, 4% user payments, is very profitable for us. It's a reach model. We get good advertising revenues, but it's being challenged by the Facebooks and etc. And what we are doing now, which actually replicates a lot what you're doing, we're thinking ecosystem. So we have our classifieds, we have our news sites, we have set up some systems where we can actually benefit from the ecosystem. And our next steps actually will be to introduce our own payment enabling technology to start playing more around with user technology. Yep. User payment, I'm sorry.
Thank you, Sverre. Coming to Axel Springer, Bodo, you've adopted quite an impressive strategy in terms of not only making small acquisitions in the au féminins of the world, but also going for the big fishes. We had the CEO of Sologer up here a minute ago. Can you maybe explain a bit, Axel Springer, same question as we had posed to Sverre. How did you come to this strategy? Do you do the same as Sverre said, that you competing head-on between traditional and digital? And maybe talk a little bit about as well, I know it's on the mind of many in the audience, what the challenges and the advantages are of an aggressive, large-scale M&A-based strategy.
Okay. I mean, principally, a traditional print publishing company has two markets, the copy price revenues on one side and the advertising revenues, including classifieds on the other side. And of course, it's evident that on both markets you have a lot of challenges through digitization. That's true for any company. At Axel Springer, we defined very early, and it's more than 10 years ago, a very clear strategy becoming or retaining market leadership in our German print business, internationalization and digitization. What did that mean in terms of digitization? Especially in the last 5 years, we immensely invested in the digital space, not only in acquisitions, but also in organic growth projects. We did more than 120 investments, and the larger part of them actually were organic investments, like relaunches of our portals, of our websites, or new ventures out of that activities. For instance, Stylebook launched by Bild.de a couple of months ago, very good success. And of course, we also tackle the copy price model in the digital world through our paid content initiative. But we tried to cover relevant segments through acquisitions. That's not really diversification in its purest sense. It's rather a related diversification. We had a pretty clear view on what are our core segments, our core competences. We segmented it in content and communities. On one side, we have the whole online marketing, advertising business, and we have the classifieds and marketplaces. And we tried to find rather later stage investment opportunities, acquisitions in those fields. One example you mentioned, the rather recent examples is Sologer, a market leader in the classifieds business in France. Other examples are Stepstone or even Zanox, the group we acquired more than 4 years ago, a European market leader now in the advertising business with a performance-based model, because there's another challenge compared to the traditional print business. It's not just a CPM-based model in the internet, but it's rather performance-based models that are important. And so far, I think we have had good success. We have more than 30% of our revenue in digital business already. And our goal is, in the medium term, to move that up to 50%. And nota bene, it's not that we think the print business will decline. We hope to keep it stable, but we need to grow our digital business through further growth of the acquisitions that we've done so far, but through other acquisitions as well.
Okay, thank you very much. We have painted a relatively benign picture of a world where the old media smoothly manages the cannibalization of its own business and builds its own successor, so to speak. Before it gets too harmonical, I would like to spice it up a bit and ask Shawn, you know, in terms of the music industry, we all know that it didn't go as smoothly. You know, we had new players like iTunes come in and replace the existing business model. There's been a lot written about the Netflixes of the world, potentially doing the same to HBO. Now there's a lot of coverage of YouTube and what they're planning to do in the space. You know, do you see the same benign scenario that we have painted, or do you see a little bit more dangerous evolution for traditional media players? And maybe comment specifically on how you see what's YouTube planning in the US and what that means for traditional TV and movie players.
Okay. Well, for one, I think it's a pretty exciting time in the media business in general. We, as a content producer, we were awarded 3 channels. You know, I don't know if people are familiar with what YouTube announced, but they announced basically a $100 million fund where they're going to be pre-programming, prepaying effectively for high quality programming, high quality channels, that's going to effectively allow them to try to take on Hulu and some of the other players kind of head on with premium advertising. So it's an exciting time for us as a new player. They're enabling new companies who maybe wouldn't have had a chance to produce content or would have had to take a lot more capital risk to produce high quality content to get into the game. And I for one, I think that if I were a traditional media player, that might make me a little bit nervous because you've got new players coming into the market with radically different cost structures. And when we talk about quality, I don't know where it's written that cost equals quality. I mean, quality is effectively in the eye of the beholder in many ways. It's also a function of how that product is consumed. I mean, for example, I'm a Netflix streaming subscriber. I've had a really horrible product experience with them because the parental controls are so bad, or the movie stops streaming midway and all of a sudden I've ruined my evening. So it doesn't matter how good the content is or how much it costs to produce that movie. It's all about how that experience is packaged for the users. So I think it is a pretty disruptive time in the media business, and I like what YouTube is doing. I think for them, this is their way of saying, hey, we want to go after that $60 billion TV ad market, and we're going to go about it and start to set the stage for what quality means for video.
Thank you. Let's come back to the origin of the question, which was that in the early stages of the substitution, we had disruptive business models such as Napster, which were in the end leading not only to the demise of the traditional original business model, but unfortunately were doing so through rampant piracy. So a lot been written about the question whether latest developments such as Netflix or Spotify may be actually ways to rectify this to help the overall pie to grow, and actually maybe the traditional content owners such as the studios or the record companies find a growing pie. I'd like to ask Kai what your perspective is on this and whether I'm being too optimistic.
Well, for one, piracy won't go away unless there's really slick user propositions, and this goes back to what you said. You need to have the right prices, the usability needs to be perfect, and you can literally take that across every vertical of traditional media going digital, whether it's music, whether it's films, which is the business we're in. Piracy, it will be there. Yes, it's being fought, but the best way of fighting it is not actually lawsuits. It's having good usability, good content out there, which is what iTunes has shown. And in video, Netflix has shown it. Look at Blockbuster, they've gone under, so that transition is happening. And you can capture the people who go from the traditional format media to digital by offering them the perfect product. But piracy, I'm afraid, is going to shrink the pie, and it's going to do that for quite some time. And we're seeing it in our business, and if we could get in video on demand only a fraction of the users and monetize them with advertising who are going to the pirate sites, we'd be a lot better off.
Okay, thank you. Let's stay with that thesis. So I translate it. He's basically saying that the likes of Google and Apple are shrinking the pie. Arnd, what's your perspective? You heard what Shawn said on YouTube and what it means for the TV industry. Will that shrink our pie? Are there ways to counter it? What is the TV industry going to do about it? Sorry for the tough question. I know it's your favorite one. Yeah?
No, it's a fair one. Because, I mean, first of all, it means if YouTube, and we all know it, they're going for our TV budgets, that's the most attractive advertising market, as we know. And it's still a premium content-driven advertising market where you have to create branding environments. So as a consequence for us, we won't never provide content, premium content to YouTube. And I believe that the entry barriers to get your hands on premium content is really high. we are buying for 1 billion euros each year content. And on top of this, we are producing our own local content, which is king, because 60% of the usage, for example, on Maxdome, on the pay VOD platform, are series and German series. And so my first point is, I think I never like a defensive strategy buyer, but our response is we will invest into own web content and, as I said, develop transmedia formats. Secondly, we can keep our eCPM really high. YouTube is floating the market with the eCPMs around 5 to 10 euro, yeah, for semi-professional content environment. But ask a Procter & Gamble or another brand advertiser, would you like to see your ad next to a skateboard or any other film, or in a brand environment like Germany's Next Top Model or series? So definitely we have enough ideas to protect our market, but it's not only about protection. We will roll out the leading VOD platforms. So I'm not afraid, and it's a fair competition with YouTube. And as in Germany, we have the leading portals, so they can come.
Shawn,
I'm just curious how you, what you define as premium content. And I agree with you that, in some ways the advertisers aren't going to want to be next to some of the user-generated content that's been produced. But now, with the new ecosystem that they're creating, they basically have in Hollywood the creators who create all of the high-quality television programming who are creating their own YouTube channels with stars that you see on all of the networks. So it's, the economic model is getting more efficient, especially at the higher end of video production. And YouTube, based on what I know, is certainly not trying to sell that for $5 or $10 on a CPM basis. They're asking for very large spend from the advertisers to just be associated with the program. Now, granted, in the big scheme of things, $100 million is relatively small from a global broadcast perspective, but from Demand Media's perspective, it really is a step in the democratization of high-quality video production.
Okay, so we're painting a picture that actually the two worlds can coexist. Maybe coming back to the Google question, I would like to ask Sven and then Bodo, from your perspective. Obviously, you're disruptors yourself with what you do. In France, you have C'est Loger, you have Le Bon Coin, there's healthy competition, different business models. What's your perspective on Google? Are they a friend or a foe for you?
Okay, I can start. Well, I got to repeat what one of the panelists said in the former panel. If Google points their guns at you, there's reason to be scared. In the classifieds business, actually I think it was well responded earlier. They've tried, they haven't succeeded so far. If they really set their minds to it, they could. There's one, let's say, protection, and it is that the classified business is pretty local business. And although technology scales, there are some local differences that probably are not that attractive to Google if they want to go globally very fast. So currently, they are more friends than our foes. They are less and less important to us as a source of traffic, as also was mentioned earlier. On the news part, it's difficult to call Google pirates because we don't charge for our content so far, but in a way, they pirate our content and put it on Google News. But that's not we're not that worried about, let's say, Google News aggregating content. I think what the New York Times is doing, what Axel Springer is doing, what we're trying to do is really to build up the credibility of the publishing brand. And I think, actually I'm quite optimistic about that. And I would even go so far as to say that I'm a lot more optimistic about user payments for content now than I was 6 months ago or 12 months ago. So probably our greatest protection is that we operate in local markets, and that's not usually what Google goes after.
Coming back to the point that Google, by definition, is a more global animal, and the protection is the local touch. Maybe Bodo, you know, in Germany there has been reports that Google is building a large local sales force and is thinking about actually going into the more local markets. As we all know, Bild has this incredible stronghold on the local advertising market. What's your perspective on that?
I would say in general we see Google as a friend, or at least not as an enemy, because they are simply a very significant part of the ecosystem on the web. And I think there are multiple examples of very good coexistence and reinforcing effects to work with Google. Of course, you always have to see what are the risks that arise from additional moves that are done by Google. But I think if you have a good strategy and if you sort of renew your product frequently, you don't have a problem with Google, but you will reinforce this coexistence, and there's a win-win situation. Okay. In principle.
All right, thank you. Let's come to another aspect. I know many of you are interested in the question, if I built a nice business and in the end I sold it to one of the traditional media houses, and I might actually consider sticking around and helping it grow to the next level. The key question is, of course, and it's an evergreen in a way, and you all have Rupert Murdoch in mind saying we bought MySpace at 500 plus million. We could have flipped it for 2 billion or so 18 months later, but unfortunately we tried to operate it and we screwed up every aspect of it, and now look where we are. We are at a business that is worth nothing. So let's ask our friends up on the stage, what have you done better, and what are the key aspects of nurturing a digital media business, an innovative business, as part of a traditional media company? Is it possible to do that? Arnd?
Yeah, I mean, our digital strategy is based on M&A and building our own business. And we've also experienced with a social network investment called Lokalisten that when we made the investment decision, we couldn't know that there will be a blue gorilla in the room called Facebook. So this opportunity with Lokalisten is gone, but there are several positive examples like MyVideo and other investments which we have successfully integrated in our digital business. So I firmly believe we have to invest into dynamic startups, integrate them really smoothly, don't kill their dynamics, learn from them, learn how they are data-driven, how they are testing systematically, and yeah, we have to innovate by investing into new businesses, because I can't see that we, from ourselves, within the corporate environment, will invent more new digital platforms. It has to be a greenfield approach. And since we are now investing over 6 years in digital businesses, in essence, out of 10 investments, 4 to 5 have been highly successful, then 2 write-offs like Lokalisten, and 1 is highly dependent on Google. It's kind of a question and answer platform. But we have learned so much and now transforming it into the TV business.
Yes, Sverre, I mean, you obviously have built a fantastic digital powerhouse. How have you managed that under the traditional roof of a traditional media company?
Well, it's been a combination of acquisitions and greenfields. Just a word of caution on acquisitions. The media industry is and will remain cyclical because of the advertising cycle. And it's a bad idea to load up your balance sheet with debt when things are looking good, because for sure it's going to be painful later on. We've experienced that once and we won't do it again. But we have we have actually 2 M&A strategies. One of them is to buy established operations and grow them. And the other one is actually building in our ecosystem. It's a system that we've developed in Norway and Sweden, and hopefully we'll launch it in France next year. We have our own VC company, and we buy a minority stake. We make sure that the entrepreneurs are there. We have a path to control. and we plug this startup company into our traffic flow, traffic machine, as was mentioned here earlier. And it doesn't work every time, of course, but it works very well when it works. So clearly, to make the entrepreneur stick around and do his best or her best, incentives are clearly there, and they are structured into the deal. But also, the culture part is key. I mean, if you see what's happening at AOL and the assets that they bought, you should simply, some big media corporates should not touch small companies because they'll simply kill them. So it's about allowing them to stay on, incentivizing them, and as far as we are concerned, nurturing that ecosystem.
So let's flip thank you. Let's flip the question around and ask Shawn if stock markets continue to be volatile and one day Sumner Redstone or Jeff Bookers come around and say, we'd like to buy you, but there's only one condition: you have to sign on the dotted line, and it's you're going to be here for the next 20 years. Yeah. What would be the conditions that you would formulate to do that?
What's the price?
Yeah. Other than the price?
I'm kidding. We've actually been fairly acquisitive as a company, through our history. Right. We've bought probably 20 or 30 businesses, and so we like to think of ourselves as a team of entrepreneurs, right? I mean, my co-founder, Richard Rosenblatt, was actually the guy who sold MySpace to Rupert, which by the way, doesn't really go down as one of the worst deals in history because they did generate $900 million in revenue for the next 2 years. So they did pull some of the cash out. But so, we would want to be able to look at an acquirer and say, is this a partner that's going to accelerate the growth of our business? We believe in what we're doing. We believe in the digital revolution. We believe in the strength of content verticals and brands across the web, across geographies, and we think we've got a flexible enough platform to be able to capitalize on that. So that would be the question that I would have, which is what is the infrastructure, what are the assets, what is the reach that's going to enable us to accelerate our business? And if there's a good answer to that question, then I would think that would be a combination that makes sense. And if not, then we wouldn't do it.
Okay, thank you. Maybe in terms of growth, we go one step further and talk a little bit about the different markets. Yenal, you are here representing probably one of the most vibrant markets in the world today. Talk a little bit about your perspective in terms of Turkey, on the emerging growth there. What can developed media markets learn from emerging markets and the other way around?
Right. I mean, just a couple of numbers then about Turkey. 34 million users, or 75 million population, 34 million users. Probably doesn't sound anything, only that number, but if I then use the number of internet users who are banking on internet, which is 6 million, so that tells a lot. I mean, indeed, which is quite a big potential for many parts of the business. What can we learn from each other? I think I wouldn't keep it only for media. I would like to answer it for a little bit wider on overall internet businesses, including e-commerce, including betting or whatever that we have been doing. So I believe that we are covering most parts of internet. First, starts with the content. I mean, content is still the king. I mean, we should never forget that. But there is one major change on the content, the way you consume the content. So the way you consume the content in the digital world is slightly, or in some cases, totally different. You look at the new digital generation. I mean, digital generation doesn't like deep analysis. I mean, if you are talking about media. So, I mean, they like to look at the pictures, they like to watch a movie, and then they like to get the essence of the news. So that is one. Second, people in the traditional world has some emotional connections to a newspaper or to a brand or to a retailer whatsoever. So that is also different. I mean, of course, there is a certain emotional connection with the digital brand that you are consuming, but it is not that strong as it is in the offline area. Trust, I would say, another element. So in the traditional media, it is taken by granted. Almost any news is trusted because they know that it is verified by the senior management of the newspaper, etc. But in the digital world, it is not always the case. I mean, in the digital area, it is always required to be verified by some other source. Probably then they are jumping from one side to another to get the confirmation. So that is another thing that digital can learn from the traditional world to build further. And one very nice thing the digital world brought to the business, which is targetable audience. I think that is great, especially for the advertising point of view. So we can target our audience in the digital world, and that comes with nice price tag to it. So you only pay what you get, more or less, comparing to on a newspaper or on a television. You have to be there because you're building an image, or I mean, you just need to be there to reposition yourself, etc., etc. But the digital world provides you complete different tools in terms of advertising communication. So there, probably the traditional media needs to learn how to find the creative ways to charge to its clients, basically, in terms of advertising users. So, I mean, overall, that's what I would say. I mean, trust is the issue, or takeaway that we can get from the traditional part. Emotional connection is extremely important, and knowing your consumer and understanding that the digital consumer is different, but at the end the content is still the content. Content is the king, so we should never underestimate in any parts of the world, basically.
Okay, thank you. So you had
with respect to what we could learn from emerging markets, then here at Schibsted, we initially thought some years ago that, okay, we come from Scandinavia with great internet penetration, mature markets, you know, we're going to go out and teach the world, so to speak. That works only so far. And one of the game changers for us in our business is the mobile phone, the mobile device. And we're not going to learn from Norway and Sweden. We're learning from, in this case, for example, Indonesia. In Indonesia, more than 2/3 of internet users not only have their primary access from the mobile device, they have their only access to the internet from the mobile device. And if that is the case, you have to think completely different and develop products, I would say, nearly from scratch, rather than just trying to integrate them with the desktop. So from our side, it's the mobile platform potential in developing countries that is really driving our innovation.
Okay, thank you. I think this is a nice transition to the question that I had for Kai, which is which current or future innovation actually holds the greatest potential for further disruption? And do you think that technology in a way will continue to drive traditional media? And mobile could be the answer, so.
So exactly, I think, and I'm going to draw the analogy from the business that we're in. Video on demand, if you take the web and you take the previous question you had to me about piracy, people, I would argue, are largely unwilling to pay for content on the web simply because there's so much of the free and illegal stuff around. But if you change the form factor, and that's two avenues for us, the connected devices, suddenly it becomes a premium experience, but it's more like TV, maybe a bit less innovative, other than you can suddenly target the TV budgets to specific people. So there's one form factor that people are willing to pay for, and much bigger on the other side, the small screen, mobile, is driving revenues and innovation simply because you can repackage. I mean, we don't need to go through the App Store innovations. That is obvious. There's formats, even of newspapers coming out specifically for iPads. There's the e-book readers. All that clearly drives new revenue streams. And suddenly, if you just change the form factor, people are willing to pay for your content and regard it as a premium experience, let alone for us in video on demand 10 years ago at conferences, people always talked about the scenario of starting to watch a movie on your TV set and then you take it away and you continue watching it on another device. Problem was it never really worked. Now it does, and we've got it up and running, and that's another user convenience that we believe they're willing to pay for.
Thank you very much. Before we open it up to the audience, I would like to have one question for each panelist, and we go from here to here. One soundbite each. What can traditional media learn from digital media players, and what can vice versa? If you're a digital media player, what can you learn from a traditional media player?
Okay, I think what is very important and is a very critical success factor for digital media business models is the fact that they are always in a kind of beta stadium. So it's a trial and error process that goes on and that makes the product better and better every day. And I think even traditional media can try to learn from that approach. And maybe the second one is try to find solutions that you can use and consume media content seamlessly.
Okay, Arnd?
Three things I think we can learn from the digital media is, first of all, act and develop your products based on data. It's all about KPIs, data-driven, and then systematically testing. Secondly, speed. It's all about speed, bring out the product, even if it's just 60%, bring it out and learn from consumer. Thirdly, extremely consumer-focused. The other way around, I think it's about brand building, how you can create brands, give trust, create content, and all the building structures, yeah? Having scale. That's what we can provide, yeah?
So coming from the digital side, it's funny, Arnd gives us, the digital guys, the credit for testing. I would have said the thoroughness of developing a product a little further and making sure it works properly is something we can learn from the traditional side, because we tend to be too fast, and if it's not tested well enough, then you actually don't produce this user satisfaction that we all talked about. And the other aspect, being a very small company, investor-led, from day one we tried to be documented, whether it was monthly reports, audits of our financials. We tried to be documented like a big company, and as we grow now, we believe those systems benefit us.
Putting on my traditional hat first, it's about skills, and they've been said before. It's about skills, data-driven analysis, launch and learn, pricing, all those skills that traditional media don't have. Putting on my new media hat, I would say that the importance of brands, brand building itself, the trust that you can build up with a brand, that you can also destroy, what has happened in some of the newspaper brands recently, but so from the new media side, try to build up your brand.
So I was in the private equity business for about 10 years before starting Demand, and I spent a lot of time with traditional media companies and tried to ingrain some of the things that I learned working with those companies. There were a few, one of which is just the importance of library value, so owning the content, building a library, building processes where you can actually control the quality of content. Those are things that traditional media companies have been doing for a long time. The importance of brand is something that's been said. I think we're trying to, our brands like eHow and Livestrong and Type F, these are emerging brands. We've partnered with celebrities to try to build them. That's helped us a little bit. And I think that speed and product excellence are probably the two things that traditional media companies could learn from new media.
Yeah. Well, I mean, from the digital world point of view, digital world offers a great platform for interactivity. I think that is what traditional can learn from digital. So the readers, users, members can connect with the companies through the digital platforms. And in the same sense, which also helps from the traditional side to digital, to build the trust and the emotional connection. So That is the area the digital world needs to work on. So if you then manage your interaction well with the users, so that can work both ways.
Okay, thank you very much. Audience, fire away. We have a great panel here. We're going to keep them here until they have answered your questions, so please fire away.
Hi, Patrick Martin, Allegro Capital. My question is, how is the impact for traditional media companies, micropayments? How big a role does that play? Because that's the monetization, I guess, that is happening right now. And is there a technology that you're looking at? And how important do you think that is for growing the business or converting it to digital?
Volunteers?
Yeah, and for me the key word is freemium, the freemium model. What we've learned from the online gaming, and for me it's a future business model which will impact all the other areas too, offer a product right in time when there's a demand for 50 cents or €1. And as we can see, the average revenue per paying user is much higher than the subscription fee, and give the user more freedom. And now this is the predominant business model in online gaming, but also in the dating field, where we are now invested in a social discovery platform, where you monetize by a freemium model. So it definitely, that will impact all our business models.